Are we rolling? Okay, live. Hello everyone. Uh yeah, so today is a bit late. I'm sorry, something happened before this, right? Yeah, my student is back. Yay. So we're going to go through where we left off basically, right? It does say 45, but I mean we're 7 minutes ahead. Uh but yeah. I think we should start earlier so we can end earlier for both of us, right? Um, and yeah, so a quick introduction to the channel, right? If you found the video or the VOD or the stream, right? Welcome, right? Thank you for joining. Today, sorry, not today. Usually, what I do is go through, accounting related questions, right? And really go through the thought process and all that, but it's more related to basics and fundamentals. So, the goal is to get as many people who need the knowledge, uh, you know, get them the basics and the foundations and all that stuff. Um, and to explain it in a way that resonates with you guys, right? So if an explanation doesn't gel with you, firstly, know that it's completely fine. And secondly, please voice it out to me, right? So I can try a different explanation, right? And usually what I do is I either go through with my student or I film my own you know my own series, right, if my student isn't around. So yeah, that is basically it. The streams for education at least are on Wednesday nights and Friday nights. In UTC time it is 12 p.m. usually, but today is a special case, right? um Other than that, nothing else. There'll be random streams happening here and there, but those are more entertainment, right? I do things that I enjoy doing, playing with friends and all that. You won't find this on my YouTube unless you know where to look, right? They will be there, yes. Other than that, let's just start without further ado. Let me bring my student back. Hey, we're good, we're good. You there? All right. Okay. Yep. They
Hello.
can hear you. All right. So let me just bring up the questions for today first. Right. I'll stream this to you as well, so you can answer it. Uh, while we're at it, right? Actually, let me stream it to you first, so you can see the question. This one, and okay, let me try and find. Should be this one, right? Okay. So yeah. You want to read out the question to us?
Sure. Uh, JB PT Limited is a food manufacturing company which prepares its financial statements to 31st March.
Mm-hmm.
JB PTE Limited wants to borrow funds to purchase inventory and non-current assets.
Mm.
Explain two ways in which a bank loan is different from a bank overdraft.
Okay, so what do you understand by loan first? What is a bank loan to you?
Um, simply put, it's just I borrow money
Mm-hmm.
in and I have to pay back at a certain fee. That
So
is correct.
interest and principal, right? You okay?
Yeah.
Okay, yeah. So interest and principal, right? Principal is the original amount you borrowed, and interest is what the bank charge you for maintaining the loan, right? Yeah. So okay, that was overdraft in your own words.
Mm, it's when uh, it's when you can't pay back a certain uh, charge,
Mm-hmm.
and the bank pay it back for you instead. Then
Mm.
you owe the bank this amount of money.
Mm-hmm. Okay. Then let me confirm one thing. Are both of these liabilities?
Yes.
Okay, right. Sure. Then, off the top of your head, do you have any you know, reasons that you can think of, like the differences?
Mm, I would say a bank loan. Um, how do I put this? Bank overdrafts happens when the company declares bankrupt, and bank lo- uh, bank loan company can take out at any time if they don't want to spend their own money.
Not exactly accurate. Overdraft is when you can't pay out of your bank account, right? Then the bank covers that payment for you.
Right.
So it's not necessarily bankruptcy. In fact, I think if the company is going towards bankruptcy, the bank wouldn't allow an overdraft in the first place.
Oh, okay.
Hmm. Overdraft is more of like an established trust between the company and the bank. So the bank allows this to happen.
Okay.
Yes. So all right, you can think of another reason, another difference.
Not really.
Okay. Right. So then let me guide you a bit, right? How long usually do you pay back your loan? Like over how many months, how many
Mm,
years?
Normally about a month to a year
Mm-hmm.
within the
Okay.
financial.
Okay. Okay. Then bigger companies, even years, right? Like 5 years, 10 years. Correct? Do you, is
Yeah.
yeah. Then overdraft. Okay, maybe you don't know, but usually it's paid. It's like credit card. You pay 1 month later. So
Oh,
one of the key
really?
difference is yeah, long term, short term.
Okay.
Yes. So the duration of the payback period is different, right? We can list a few actually. Um, what was the other difference that you can kind of think of?
Mm, hmm. I I mean, if I would take a guess,
Mm.
the rates
Mm.
the bank charges
Okay. Lower interest rate for which one?
alone.
Okay. Yeah. If I'm not wrong, this is also true, right? If you think about overdraft, you can kind of think of it as like a credit card, kind of
Right.
thing. Oh, okay. Thank you, Shenzo Lofu, for the cheer there. Okay, let's continue. Um, right. What about the third reason? Maybe we can squeeze one more out. So you have more options during the exam.
Mm, oh, how to say?
I
I
mean, you
don't know
compare
if
a loan, like maybe housing loan, compared to a credit card.
Mhm.
Uh,
This loan has a higher upper limit to how much you can borrow rather than a
hmm,
overdraft.
yeah, higher amount, right? That you can actually borrow.
Yeah.
Okay, yeah, then you can kind of phrase it as such. You don't have the answers with you right now, right? You can check if what we said is accurate enough.
Okay. Sorry, is my audio not picking up?
No, no, it's fine on my side.
Oh, okay. But yeah, I don't have the answers, so I guess
Ah, okay, that's fine.
this is accurate as it gets.
Okay, all right. You can check it when you go back home. Just let me know uh how it goes, right? All right, the second one. Okay. Well, who would be interested in how company borrow? get loans, right? Off the top of your head, who do you think would be interested?
Shareholders.
Shareholders, okay. It's the most obvious one, right? Why would they be interested?
The company is taking in liability, and
okay. And I mean, if you think about it, interest is an expense, right?
right,
It will decrease their profits, right?
right,
And less profits might mean lesser dividends, or even no dividends, right? Or even all those sort of things. Yeah, sure. That is one of the reasons, right? Uh,
right.
okay. What other who else would wanna use? Wanna know?
Um, uh, I'm not sure.
Okay. What about other people who lend you money, right? Or like who you owe money to? So your
So
creditors or suppliers, right?
okay, okay,
So more loans uh equals to lower chance of getting paid back, right? So why is that? If you overstretch yourself, you take too many loans and they all expire around the same time, eventually you're gonna run out of cash, right? Like you can't pay everyone back at the same time, and that will be an issue. So
right.
yeah, that is two that I think are the biggest ones, right? Of course, there'll be other people who are looking at it, but I think two is good enough for now, unless you want more.
Two is good. Two is good.
Okay. All right, then we move on to this, right? Um, so they took a bank loan, right? You can read this. Essentially, they took a bank loan on October 2017. Repayable in 5 equal installments and at a certain date, right? 30th Sep. So, let's do a bit more work, right? So, uh, what happened? Okay, let's just answer this first one because it's relevant, right? What happened on 2017? First of all, what are the
Uh,
accounts involved here?
uh, I mean, uh, you increase liability,
Mm-hmm.
so debit, um, debit bank loan 150k.
When your liability increase, is it debit or credit?
Is this for banks? Oh, this double entry, right?
Yeah, this double entry.
You sorry, liability is credit in nature. You credit.
Okay, so you can say bank loan, or we like to call it loans payable.
Mm.
Okay, then what do we debit here?
Uh, we debit. Uh, we debit equity,
Equity.
right? What's that?
As in, when you take a loan, you tell the bank, I owe
You
you money, and what do you receive in return?
receive money. Debit. I believe cash.
Yeah.
Uh,
So cash,
yeah.
either at bank or on hand. Uh, I think in the exam you can just say cash at bank, right?
Okay.
Okay. Then okay, so we've established which to debit, which to credit. So what's the amount here?
150k.
Mm. Okay. Then with what the question said, right? We can do some pre-work So we know that it's payable in 5 installments, right? So how much is one installment?
One installment is 150K divided by 5, which is 30K.
Okay. Okay,
And then
so right, let's draw a timeline, right? So when did they take the loan?
1st October
What year is it?
2017.
Okay. Then it's payable every 30th Sep, right?
Mm-hmm.
Okay, so 1, 2, 3, 4, 5 is a bit. Okay. Then when it will be the next date of payment?
30th November.
November?
Is it not?
They say
After
the
October.
repayment is payable at.
Oh, every 30th September. Oh, so it's once every year.
So when is the next one? What year will it be?
30th September 2018.
Okay, then the subsequent ones are 19, 20, 21, right? Okay, so that's 5 payments. So we also write down how much is outstanding at a certain date, right? So 150,000, and then what would be the outstanding on 2018, 30th September?
Outstanding would be 120,000.
Okay, yep, that should be correct. And oh yeah, okay, then I missed out one more date, I guess. Maybe 30th September 2022 would be the last day. Oh, sorry, you guys can't see the. Just know that at the end it'll be 0, right? Oh, pardon the. Okay, right then. Okay, right. So we can move on to the next part, right? Repayment made on 30th September 2018. What do you do?
Uh,
What are the accounts
you
first? You think about the accounts.
okay? Uh, um, loan loan payable
Mm-hmm.
and credit cash.
Okay. Yeah, you got it correct.
Yeah.
Nice. And how much?
Uh, Loan payable is, was it 30K? It's
Mm-hmm.
30K, right?
Yep.
Right. And then credit cash 30K.
Yeah, nice. Okay. And that is done. We are done with this question. Right, the next one is a bit blurry, so I retyped out the the question underneath it.
Good question.
Yes.
5% tax. Do we need to factor in?
No, that is interest.
Oh, yeah. Sorry, interest. Yeah.
So interest
Do
won't be
we?
part of loan payable. It will be under
Oh,
something we call interest payable.
correct.
Yes. So actually, let's see if I can. We can use this, right? So from 1st October 2017 to 30th September 2018, how much interest do you think they would have to pay here?
5% of 150K,
Which is
which is I have to calculate this.
Yep.
3 0.05, which is 7,500.
okay. Then what about from 2018 to 2019?
5% of 120K. So $600.
600 or is it 6,000?
Hold on. 3 times. Oh yeah, 6,000. I left out a zero.
No worries. Yeah, just make sure you double check. Uh, I think as you do more questions and you deal with more percentages, you actually have a gut feeling of like whether or not your
Right.
calculation is correct. If the number seems too big or too small, it can be sometimes obvious if you practice a lot more. And all right, what about the next one?
60,000 times 0.05, 3K.
Okay, then the last one will just be 1.5, right?
Right.
Okay, so this will be the interest payable for this period, but there is a trick in this question, okay? If we scroll back up to the very start, when is their year end?
The year end.
Mm.
The year end will be first of March. Was it? Oh no. Uh, 31st March. That is.
Okay, so we look back, right? 31st March will lie somewhere in here. I'm going to use red, right? Somewhere in here, right? The year ends.
Right.
Actually, it will be near the. Oh. Where did my. Okay. It will be near the front part. Okay, so this is 31st March, right? Okay, so this you might not know how to do yet, but let me just explain, right? This 7,500 is across the whole year, right?
Okay.
So the portion in, okay, let me use a different color this time. The portion in orange, this curly bracket in orange, would be the interest expense that you've incurred and also hopefully paid, right? Actually, no, it's not
Okay.
paid yet. Yeah, it's not paid yet. It's paid at this
It
date.
is paid at the end of the year. Right.
It's paid at no, it's paid at 30th September.
Oh, so it's together with the
Correct,
payment. Okay.
correct. Then the one in purple would be interest expense that you will be paid later, but it did not incur in the current year. So, do you recognize the purple as of the red colored date?
Wait, what do you mean? So,
Do you recognize the amount in purple? Right. Let's just do a quick calculation, okay? So, from October to 31st March, 1st October. So, October, November. By the way, it's perfectly fine to just use your finger and count in the exam. Please do that.
right.
It's more accurate. So you just count, right? October, November, December, Jan, Feb, March, 6 months. So 7,500 divided by 6 months over 12 months, right? So sorry, divide by 2, essentially. So 3750. And the orange is also 3750. So, well, quick question, right? The orange 3750, do you include it as the expense for, the year ended 31st March
No,
2018?
no,
The one in orange.
I don't think you do. No,
Actually,
Cause
you do. Because it
do.
is in the period leading up to the year end date, right? From 1st October all the way up to 31st March, the interest expense is spread out. Do you get it? The red color line is a cut off. So anything before that would be included in the year that you know, in the year end.
Oh,
Anything afterwards, the purple one, is not included.
okay.
Do you get it now? You think of it as a cut off point. Like if you if you think of like, this entire timeline is a string, right? And it goes
Right.
from left to right. Anything before the year end, imagine it's a knot, right? Just a random knot. Anything
Right.
before the knot is included. Anything afterwards is for the next knot.
Oh, okay, okay.
Mm.
Okay.
Right. So, all right, next question. As of the red colored date, 31st March 2018, is this orange portion paid yet? Have you paid for it yet?
Sorry. As of when?
As of the red
31st,
colored 31st March 2018, the red colored date.
2018.
Mm.
The purple line is carried over. So including from 30th September to 31st March, uh it is that portion which is 6,000 fight or whatever calculations it is between 30,000 30 September to 31st March, that part, including the purple line 3750 is paid together. No, it's included together.
Okay, you gotta think of it as two timelines running consecutively, okay? The one
Okay.
on top is the accounting timeline where the accountants do their own thing. The
Right.
arrows below is the bank's timeline because the bank doesn't care when your year ends, right? They'll
Hmm.
ask for payment exactly 1 year after you've started the loan, and you could start the loan at any time.
Okay.
So when it reaches 30th September 2018, that is when you actually pay interest plus your principal, which is your 30,000, right? Interest would be your 7,500. Your principal would be the 30,000.
Mm.
That's how usually it works, right? And so,
Okay.
as of 31st March 2018, have they actually paid anything yet?
31st March 2018.
Mm. Have the company
Um,
repaid anything yet?
no.
Right. So, okay, then now we can go back, right? Where is right? So interest payable is calculated on blah 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 blah. Actually, let me copy the table over. Give me a second. How do I do this? Let's see if I can get this copied over. I hope this is okay. Let's scroll down to this. Should be this one. Oh, this is too low. Let me move it back up. Okay, so I've copied over the table, right? We'll use this for the calculation for this next part, right? So calculate interest expense to be shown in the income statement. So now that we have gone through all the work before that, right? What do you think this answer is? The figure is already there.
Calculate the interest expense as of 31st March 2019.
Oh, 21st March 2019 is a different date. It's this one.
Is the one there?
Yep, so we
Um,
can rework it, right? So
right.
I'm gonna
Uh,
recolor the
right.
yep. So
September is October, November, December, Jan, Feb, March, Jan, Feb. It's first March, not 31st March. So March, so 6. Uh, yeah, so it's half, right?
mm,
So it's uh interest expense to be shown in the income statement.
mm-hmm.
So it'll just be 3K.
3K.
Is it? Yeah. 6,000.
You are halfway there. But remember what happened
You
last year?
add the three. You must add the 3,750 from
Yes, correct.
before.
Correct. Nice. So yes, you gotta take the red curly brackets figure
Right.
to get the actual answer. Yes. So this is the answer. But why? Why do you think you have to do that? When does your year start? When does your accounting year start?
Continuous start on 31st March.
That's year end, right? So accounting year will be the day after. So 1st April, right?
First,
What
yeah,
year? What
April.
year is it?
1st April 20. Sorry, 20. Right? Yeah,
Hmm.
20.
As in for the year ended
Oh,
31st March.
year ended 31st March. The year starts. Uh, the year starts on the first April 2018.
Yeah, correct. So anything from 1st April 2018 to 31st March 2019 should be taken, right?
Right.
So that should be the thought process when you look at it. And so yeah, you got the correct answer.
Okay.
Yes. So it is actually the purple plus the orange,
Mm.
right? So this is how you deal with the case where
With
the
bank.
loan is taken at a different time from the year end. So you gotta do a bit of, uh
A bit of shifting.
calculation. Yes.
Right. A bit of shifting as well.
Yes.
Okay.
So this is why I say you draw a timeline. It will save you a lot of brain power. Takes a bit of time, yes, but if you can draw it fast, you don't need to make it pretty, by the way. Just draw it fast. Yeah, you
Right.
can. As long as you understand, then it's fine. The markers won't be marking your. They won't be marking your table, anyways, like your timeline.
Right.
Yep.
So it's just my own process.
Yes, it's for your own understanding to make sure that you get it correct.
Okay.
Because it's a I would say it's pretty painful if you do all this and still come with the wrong answer. So even though I told you to draw it fast, right, you gotta do it correctly. Okay. So comes with practice. Just do a bit of practice afterwards. Okay.
Right.
So next question. Yeah. So balance sheet. What goes in the balance sheet?
What goes in a balance sheet?
Mm-hmm.
I'll say, let's say everything, but um, I don't know what specifically goes in a balance sheet.
Okay. So balance sheet, it's mainly your assets, your liabilities, and equity. So the
Okay.
full like accounting equation. Uh, income statement or statement of financial performance or statement of profit or loss is a small snippet of the balance sheet. So that number will actually be transferred from the income statement to the balance sheet after you're done with it. If you can get kind of what it means.
Uh, Sorry. The after you're done with after you're done with it, is it the income statement that carries over to the balance statement, or is it the other way around?
Income statement should be done first,
Okay.
basically. Yeah.
Okay.
All right. Then okay, so that's beside the point, right? So this one they want you to show the liability section, right?
Right.
So how do you classify different types of liabilities? How do most of us do it?
Uh, Short term and long term.
Mm-hmm. So what is the proper term for it?
Uh, Non-current liabilities and current liabilities.
Okay. So under non-current, what do you think you have?
Under non-current, it will be uh, loan payable.
Okay, loan payable how much?
150 grand.
150? Are you sure? We're at this date, right?
Wait. We're at 31st March 19. Okay.
Yes, yes.
Then it will be uh loan payable 90 grand.
Oh, sorry. No, I
This
wrote something
yeah.
wrong.
So it will
Um,
be and
well, not exactly. Okay, if you look at this, right? The timeline, 90
right.
grand is outstanding in total, right? But do you pay a certain amount during
Oh
the
yeah,
next
you
year?
pay installments. So you only write down installments, is that it? The installments are supposed to pay.
No, no.
So it'll
As in, let me rephrase this, right?
right,
90K is total outstanding.
right.
90,000, right? How
Right.
much are you paying within the next year? Which basically between your 2019 and 2020, 31st March. Will you be
Uh
paying anything
th-
at all?
well yeah, 30 grand, right?
30
30
grand.
grand worth of
Hmm. So if it's paid within the next year, do you think it is considered long term or short term?
short term.
Short
Within
term.
the year will be
So you have 30 grand, which is under short term, which is current, right? And then your 60 grand that is under long term, which is non-current. So under here, your loan payable would be yeah, right over there.
sorry.
Yeah, no worries, I got you. I've muted it. Let me know when you're ready to come back. Mm-hmm. So yeah, hopefully you guys can understand. Um. Oh, okay. Welcome back. Um. Right. So this part, do you understand? So far, any questions?
Uh so the non-current asset will be 60K, and then the current asset will be 30 grand.
It's liabilities, not
Plus
asset.
yeah, non-current liability.
Yeah. Yeah.
Plus 60 grand is to be paid if in the year after
Mm.
in the years.
Correct.
Okay,
Correct.
okay. So I got that.
Yeah. Loan payable would be. So this one you usually say like less than 1 year, right?
Right.
And then what else do you have under current liabilities?
And the income the loan interest
Loan interest of
percent, which is uh 3,000 plus two, sorry, 3,000 plus 1,750.
why 1750?
Cost from 30th September to 31st March 2020.
Hmm.
That part.
You're over here,
So
right? You're on 31st March 2019, right? When is your
so
next payment to the bank?
next payment to the bank will be 30th September
Which year?
19.
19. And what of that payment, how much of that payment has is part of this year, but it hasn't been paid yet?
It's part of this year but hasn't been paid yet. Uh oh, from 30th Sep 18 to now, the 3K.
So which color is it?
Oh, the orange one.
The orange 3K, right? So I'm actually gonna write it down here, orange 3000. Because we're dealing with two numbers here, so I want to make it very clear, right? Interest payable.
Oh, so this year you have to. It's technically 3 sections, is it?
Correct.
Okay.
Yes.
Okay.
So, if you want the double entry for the interest, it actually looks like this. Your interest expense, your interest payable,
Right.
and then oh, this is at the, let's see. Okay, and you have paid off the ones previously. Yeah, so at the very start, right? You just write this down: interest expense, interest payable, and you write the full amount to recognize it, right?
Right.
And then afterwards, when a payment is made, you actually deduct it from the interest payable. So you cash and no, sorry, not cash first. Interest payable and cash. So for example, it is for example from October 2017 to 30th September 2018, the full amount was 7,500, right?
Right.
Yeah, so would be it. And of course, previously there was a recognized 7,500 before that. Yeah. Let me think. What else do I need to? Oh, sorry. Okay, wait. Seems I made a mistake here. We need way more space if I want to draw the full double entry. How should I do this? Let me just zoom out. Okay, so right on 1st of October 2017, right?
Right.
You have you recognize a loan payable first, right? So you receive cash, and then your loan payable. I'm just gonna call it LP at this point.
Okay.
So 150 grand and 150 grand. It's off the screen for you guys.
This is sheet, right?
Sorry.
Balance sheet, right? Or is
No, this
double
is
entry?
just your general journal, your general ledger. Just your
double entry.
yeah.
Okay.
So I'm just gonna call it journal, right? And then on 31st March 2018, you recognize interest expense and interest payable because you have not paid it yet, right?
Right.
So that would be 3750, right? Then on
Right.
okay, then let's see,
30.
go to here, 30th of Sep.
2018.
Yep. And then you have interest payable, and then you have cash, right?
Right.
This amount would be 7,500. Okay.
Right.
And then
Then
you could also recognize interest expense up to that point. So interest payable and interest expense. Because sometimes it doesn't make sense to have a negative balance in payables. So you have 3750, 3750. And there you have cash, 7,500.
Okay.
Yeah, I think this is correct. And then afterwards you have a 31st March 2019. You have an interest expense and interest payable.
Are we only writing down the interest part and
Yep.
okay, we're only writing down interest part. Okay.
Mm. Yeah, so this will be how I will write it, right? And if you can see, right, the interest expense for the year will be these two numbers.
Mm.
Mm. So this 7,500 will pay for the interest incurred last year and also the interest up to the point in this year for 2019.
Okay.
Mm. So hopefully you get the idea. So far, any questions?
Let me think. Uh,
Sorry.
interest expense carries over. I think I get it. Okay.
Okay, so you can explain in your own words how this came about.
From 31st 18. So 3750 comes out. Yes, 30 years. 30 years. So, okay, 30 September. Of okay. Uh, cash, cash credits 7500 that's paid by 30th. Okay, and then as of the new year, it will be 3,000 because it'll be over. Okay, yeah, no, I got it.
Okay. Then other than that, any other questions with anything else?
No, I think I'm good.
Okay, so let's do a bit of recap, right? So first of all, we differentiated between loan and overdraft. They're very different use cases, right? But they're both under liabilities. Okay. This one, do you get it?
Yes.
Okay. Then the next one, we went through, who cares, right? Who cares about, uh, if the company takes a loan, right? And we've listed two of them. You could always think of more, right? These are the two biggest ones that I think are important, right?
Most relevant.
Well, it depends on situation as well. But
That's true.
yeah, usually this is the case, right?
See you.
Yeah. Then afterwards, there is we went through a whole process of how to recognize loan interest and also loan payments in
Right,
in the next two questions, right? And we went a step beyond, went through the whole double entry journey,
right.
and yeah, and also how do we split the loan payables depending on when the next payment is, right? Okay, so now we've gone through all that, right? Just a brief overview. Any last questions for this?
Mm, I think there's another situation where I don't know what I don't know.
Okay,
Yeah.
then I
So I
think,
guess
yep.
I'll have to wait until like the future similar topic comes out, similar question comes out, and then it's like a new thought process comes through.
Hmm. Okay, sure. But so far, the explanations you can accept, right? Like, no, nothing that you don't quite understand from the explanation itself.
Yeah.
Okay.
I can process. I can process what's thoughts so far.
Hmm. Okay. Then, if not, we can end it here. Thank you so much for uh
Thank,
participating in the lesson itself, right?
thank you.
Yep. I'll see you around. Bye bye. Okay, so yeah, that is the end of the lesson, right? Um, and yeah, for those of you who are watching this VOD back, and let me see if there are any viewers. Nope. Okay, so yeah, for those of you who are watching this back, uh, again, it's a bit complicated if you're just starting out. So the key here is to actually practice it more, right? Um, you can think of a few scenarios on your own, right? For example, you make it simpler, 10% interest, and $100,000, right? With a $20,000 repayment each, right? Installment. And then you can work it out from there as well, right? Um, Other than that, yeah, today's topics are relatively basic as well, right? Um, Again, I will be posting the notes and the VODs, hopefully by tonight, right? Usually. And then yeah, once again, thank you so much for watching the VOD. Right, if you have something you don't understand, please do reach out to me. Either through the YouTube comments, the live chat, or a form that I've set up. Right. Other than that, there isn't much. Right. So if you're interested in learning more, um, accounting basics, right? You can either watch the VODs that have accumulated so far, or you can join with my lives. But the thing is, usually this builds on previous knowledge, right? Once in a while, I will revisit if I have time to go through. So yeah, do revise a bit. Yeah, so the VODs of the later dates, I think I will actually skip over the very, very basic, like accounting equation and what to debit, what to credit, because again, my student's time is quite limited, right? He has a lot going through as well, so now he's going through a lot, so I don't want to take up too much of his time here as well. So yeah, other than that, um, if you're watching those that my students are not in, I would usually go more in depth, more basic stuff as well. Hopefully do more recap on these sort of these sort of things. And yeah, other than that, that is actually all from me, right? Take care in the meantime. Yeah, it is the middle of the week, so for those of you who are working, only 2 more days, 2 more days before the weekend. Yes, so hang in there and take care. Yeah, see ya. Bye bye.